Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and I came all the way to this hotel to meet up with another YouTube celebrity to help us understand what's going on. All right, guys, as you can see, I have Michael Bernanero with us. Michael, sir, how are you today?
What's up, Travis? It's a pleasure to be with you, man.
So nice to see you, brother. So I'm glad you came here today. Obviously, you guys, I'm gonna have Michael try to answer some of the questions I have. Now, Michael, today's video is basically about the sticker shock or massive unaffordability going around the nation and how that's actually impacting, like, in major ways, both the sellers and the buyers in the real estate market. And then I want to get your overall opinion on what you think the current state of the housing market is and basically what you think is going to happen next. And I know you don't have a crystal ball, brother, but I really appreciate you coming here. And you guys go to his channel, check it out. And if you can, real quick, like this video, subscribe if you haven't already, shoot us a comment below, and let me know you guys love these types of videos. Now, Michael, and real quick, guys, we're walking through a hotel because that's what I had to do to get with my boy right here. Came all the way to this hotel, so people are looking at us, super embarrassing, but we're gonna try to rock it. So, first question, Michael, can you tell the viewers, basically how you think home prices, not necessarily payments and interest rate, but how are the prices of houses, affecting buyers, but also how is that elevated prices affecting the seller of houses as well?
Yeah, well, obviously the buyers are feeling definitely priced out, and that leads to buyers giving into the FOMO or the fear of missing out, so to speak. And the sellers, they're kind of in a weird situation because it's like, if I sell, I can get a really good value for my house. I'll be able to maybe sell it for a record price. Then I got to turn around and pay a record price for a different house with a high interest rate on top of that. So really, these high prices aren't really good for anyone except for someone who's looking to cash out and maybe put that money into a different investment outside of real estate, or they want to cash out and downsize and maybe buy something half the cost of what their current house is. So that would be a good situation for that type of seller. But for any type of move-up sellers, anybody who's looking to get into a bigger, better house, expanding their family, it is not good for them right now. And obviously buyers are feeling that same pain as well.
I mean, it's kind of like, the buyers are locked out, sellers are locked in. How are the interest rates impacting sellers in the sense that this, Michael, I've been hearing, some new concepts, and I'm not sure that I agree with it, but a lot of people, mostly realtors, are now saying that when rates go down, back to 5%, if they go back to 5%, that we're going to have a flood of inventory.
Yes.
Enough inventory to crash the market. And I'm just sitting back like, I kind of think that there's more buyers on the sidelines from that, but what is your take on if the rates go to 5% right now, like the realtors want, will that just crash? Or, will that make the bubble worse? Will it give us inventory? What are your thoughts on interest rates?
I think it will give us inventory, that's for sure. But I think also that one thing everybody has to always keep in mind, that if interest rates do go down to 5%, then that's likely because the Fed made a big pivot. And when they do that, it's going to be because things are not good right now. It means that the economy is in bad shape and they think it's a good time to cut interest rates, which means that the economy is falling apart and they're trying to save it once again with their interest rate shenanigans. So yes, is it going to cause more people to list? Absolutely. But in an environment like that, how many people are actually going to be able to qualify to buy? Because most likely that means unemployment's probably ticking up and less people are going to be able to have the money or the job or even the pre-qualification to be able to buy a home. So we could see a situation where you have inventory on the rise because sellers who've been waiting for that those interest rates to drop like that so they can get into a new house, everybody's thinking the same thing. So you do see that flood of inventory, but who's going to be there to buy it is my question. Are these current sellers, are they going to be able to maintain that housing market? Are they going to be able to have enough wealth, I guess, to buy all that inventory? Because they're looking to sell, not everybody's going to be looking to buy. So I think it's going to lead to a situation where the inventory will definitely surge, and it might bring the housing market back to a more affordable rate, because when we have all that extra inventory, that's the only thing to me right now that I keep hammering on my channel, that's just the reason why home prices are still so high. You're still seeing bidding wars and competition among buyers because there's just not enough homes for sale. So if that were to happen, I think that would be a great thing for the housing market. But realistically, seeing 5.5% interest rates anytime soon, it's probably not going to happen, folks. I mean, we're looking at high interest rates at least through the end of this year, if not well into 2024.
What happens, Michael, is the yield curve uninverts right before the recession. We don't even have the yield curves uninverted yet. So, Michael, and we don't want to play conspiracy theorists here, guys, but you know, the thing is we understand how powerful media is, and we also understand how important it is, you know, that the media spins a positive message because they essentially want you to continue to spend money, specifically on houses and other things. But Michael, do you think that someone, call it the government, maybe the presidential election, do you think that the reality of what's going on right now is they're just propping up the housing market? Do you think it's being propped up? And do you think if they didn't prop it up, do you think it would come falling down?
Oh yeah, I think it would have came falling down back in 2020. It was already falling down if we go back and look at where the housing market was going before all this stimulus was made. Things were taking a nosedive back then. So there's no doubt in my mind that the only reason that the housing market is continuing forward at this rate right now is because of all the money printing that happened, because of all the propping up that the government has been doing. There is stimulus coming from every single angle. We had all of the money printed during the pandemic, but besides that, more recently we had the bank failures. You know, they printed an extra $400 billion to bail out those banks. And on top of that, now we have this student loan dilemma where they delayed the payments for as long as possible. They're supposed to resume this October in 2023, but now they have come out with yet another program to basically not punish delinquent borrowers on student loans. So what they're going to do is they're basically going to make it so that if you have a student loan and you miss a payment anytime between October 2023 and October 2024, you're not going to get dinged on your credit score, and you're not going to be accumulating extra interest, which is another way to prop up the economy and keep more money in people's pockets to potentially spend it going out to the movies, buying a house, or whatever they want to do.
The consumer can only afford to pay for this for so long. I mean, we have the lock-in effect for sellers. We have the lockout effect for buyers. We have more quantitative easing. I mean, the propping up is absolutely insane. You know, how much longer can consumers even afford to pay these bills, man? How much longer can this last, Michael?
I think it's going to last until people run out of credit, because this entire thing is built on a sham, and that sham is called debt. So as soon as people run out of the ability to borrow against their home, as soon as they run out of the credit cards they have available to them, everything is maxed out. As soon as that is finished and their wages hit a ceiling, that's when I think it ends. But obviously there's no exact date or time frame on that. Nobody really knows when that really is. But I think when that point actually comes, when people don't have the ability to borrow anymore, that's when we're going to see things hit a wall.
I've had a lot of comments like, Travis, you know, the housing market crash didn't come exactly how you said it. You're wrong. You know, the housing market's just going to go up. You know, things like that. I know that things take time. I know that there's cycles. I know that there's curveballs like quantitative easing and things like that we didn't know. But Michael, can you speak into my viewers and really talk to them and give them your opinion on the current state of the market? And this is what I mean. We had massive value decline from July to about February on a national average.
That's right.
House values have rebounded. They rebounded around, you know, the bank bailout and seasonal home buying. Home values are basically have gone up at a similar pace as last year, which is Really astonishing. What's the current state of this market? What's going on right now, Michael?
Well, there's no doubt that it's overvalued. Every single indicator shows that it's overvalued, especially when you look at the value to income ratio in all these different markets. It's pretty much at all-time highs. And like Travis just said, there was a big decline in July, if you look at a graph of the housing market between July and January of 2023, what you'll see is actually an 11.5% decline in home prices in just 7 months. I don't think we can ever look at a period in the past when that happened before. And to say that it's all just going to get better now and it's all in recovery mode now and it's all just going to be to the moon from here, I feel like is very foolish thinking, because the housing market never does that. It never moves in short cycles like that. Well, it went down for 7 months and it's going to go back up forever. No. Usually when home prices come down, it will come down for several years in a row. And we have so many different things stacked up against us right now, with the student loan debt coming due, with the interest rates remaining high and probably likely to go higher throughout the rest of the year. Inflation is still a big problem, and people are not making the money to pay for extras, for anything, guys, because think about this. Even though we have people getting raises and the amount of money people are making is going up, in real world terms, when you factor in inflation, people are actually more broke than before, because the amount of money that they're getting in raises is not keeping up with the rate of inflation, and that cannot go on forever.
Next year we have a 2024 presidential election. Do you think that any of what's going on right now is a result of manipulating numbers for the presidential election, or do you think that's nonsense?
I don't think it's nonsense. You know, I listen to a lot of my viewers and I listen to the comments and the things that they say. I'm certainly not a conspiracy theorist either, but I don't think you need to be one in order to recognize the fact that this does happen every single time there is a major election. There's a lot of manipulation that goes on in the markets, and to say that it's not going to happen this time is probably, you know, it's not the case. It is happening, you know. Obviously, the Biden administration wants to get reelected, other politicians want to get reelected, and they're doing things like not penalizing late payments on the student loans and bailing out the banks and doing these different things that are going to keep things propped up probably just in time for the next election. That's my guess.
I mean, you know, if consumers can even make it that long. I mean, the thing is like with sellers, if a seller purchased a house in, say, 2020, you guys, their mortgage payment or their payment is way higher because everything is going up, Michael. That's, you know, that's one of the problems here. Property taxes skyrocketing, homeowners insurance skyrocketing, interest rates, everything is skyrocketing.
Absolutely.
You know, except maybe eggs. Are eggs down now?
I think they're still pretty expensive.
Do you even eat eggs?
I eat eggs every day.
As do I, so that's not a bad, that was a bad example. But nevertheless, we want, you know, the unaffordability to, you know, get better in the housing market. We want it in shelter. We're not seeing it. It's probably because they need the housing market to do well right now, because that's probably one of the only things in the economy that's preventing us from going into recession. So I believe that whoever's, you know, the next president is going to be a president of a crashing economy, okay? But Michael, we know there's a lot of young adults, never been through anything like this, don't even know what a bankruptcy is, don't even know what a foreclosure is. I had all those things happen to me.
That's right.
What can you tell the people right now on the sidelines on, you know, how should they get through the frustration? How do they get through the unaffordability? How do they remain patient when they see all of these crooks take the home of their dreams?
Well, I think there's a lot of things that the average person can do. Obviously, number one, you need to have your finances straightened out. You need to make sure you're not carrying any bad debt, like credit card debt. The student loan debt can be a big problem as well. You know, if you're carrying that, that's going to lower your debt to income ratio. So getting rid of any type of debt that you can is going to do a couple of things for you. Number one, it's going to free up more of your monthly budget and how much money you have left over, but also it will help you qualify for more home. So that way you can keep up with these high prices if you are somebody that wants to jump in to this market. But besides all of that, you can look for different ways to earn additional income. Another thing that you can do, which I always encourage people to do, is look outside of your current market. You know, some people get frustrated because they feel like they're priced out of where they live. But the reality is there's still a lot of places throughout the United States that you can live that are very affordable. I have seen them even just on my trips here. Like, to be able to have a house payment that's $1,600 a month these days is pretty reasonable, especially at a 7% rate. And I think most people can afford that. And the reality is that does exist. But whether or not you're willing to move to a place like that where that exists, and whether or not you want to live in a place like that, that's a personal decision that you have to make in order to really decide how bad you want to own a home, right? Do you want to own a home bad enough where you're going to move to a less expensive market and make all these financial sacrifices that need to be made? That's up to you. But instead of complain about it and say, oh, I can't afford it, it's too unaffordable, I would much rather be doing something about it and taking some action rather than just complain that it's unaffordable.
If you have to buy, one thing that a lot of people do to get creative, including myself, is we move outside of the downtown city. You know, I move into the suburbs. It's a lot of times it's cheaper there. And also, you know, maybe not getting the house of your dreams at first, especially if you're first-time home buyers. Now, if you're a homeowner and you're struggling, I mean, my thing is, Michael, is, you know, shop your electric bill. In Texas, we can shop our electricity, you know, shop your homeowner's insurance, try to file any homesteads, you know, protest any assessed value. But Michael, you know, people are struggling. People are struggling with affordability, and they're struggling to save money. And I just don't see a situation to where this lasts much longer. What do you see next year looking like?
Well, I think next year, people are going to be stunned by the fact that we're probably still going to have close to 7% interest rates, because all the experts were calling for interest rates to be at or below 5% by the end of 2023. That's out the window. That's not going to happen, especially with more Fed rate hikes on the table right now. And I think you're going to see the real consequences of the recession start ticking in and really starting to be felt throughout the economy, because one thing people have to remember is all the interest rates that have been done, all the interest rate hikes that have been done by the Fed so far, those typically aren't felt for 12 to 18 months after the interest rate hikes were done. So only right now in July 2023 are we feeling the interest rate hikes from last year in 2022. So when you compound that into next year, I think it's going to be a much different picture than right now. And I think we're definitely going to see many markets that have year-over-year price declines by the beginning of 2024. That's my view on where I think things are going.
If you guys can be patient, make some sacrifices, and try to achieve your goals. You know, we're in a situation to where even the Federal Reserve, Jerome Powell, has said if you're a first-time home buyer especially, you may want to sit this one out. Now, if you're an investor, you're finding great deals, you're cash flowing, you're fitting your goals, whatever. But, you know, predominantly, man, I'm talking to first-time home buyers, because traditionally, first-time home buyers are the biggest at risk of using their emotions to buy real estate. And when someone uses their emotions to buy anything, unfortunately, that's when people could take advantage of them, and that happens all the time in real estate.
I would like to tell people, like Travis said, definitely be patient. Don't feel the FOMO, because there is a lot of inventory out there that might not be on the market right now, but that can easily change in a recession, guys. That's definitely something that can turn around pretty fast. The amount of inventory can tick up. Investors are already starting to lose money. They might be selling some of their properties. You have regular folks that might not be able to hang on during a recession that might be selling their real estate. And on top of that, you have home builders that are out there building like crazy right now because they feel very good about the housing market right now. So there's a lot of new inventory that's likely to come online over the next couple of years as we actually get into this official recession. So I think having some patience right now definitely can pay off. But like Travis said in the beginning, neither one of us has a crystal ball. And if you feel the fire that you have to buy right now and you find the right deal that's affordable for you, then by all means, do it. Don't listen to us. You should listen to yourself and what you think you need to do. But what we're trying to do is present the data and give you guys the right idea of where things might be headed, because the media is not going to do that. You know, they're just going to say buy, buy, buy. And every real estate agent's always going to say it's always the best time to buy is right now, right? So they're never going to give it to you straight. So that's all we're trying to do here.
Yeah, definitely appreciate you, man. You guys go to his channel, give him some love. He didn't have to be on this, but Michael, I just want to say I really appreciate you joining us today, and thank you for speaking, to the viewers. You guys show him some love. Now, other than that, guys, if you're out there investing in real estate, we wish you luck, and we both hope you win.